Good afternoon and welcome. My colleagues and I have one overarching goal: to sustain the economic expansion with a strong job market and stable prices for the benefit of the American people. At the FOMC meeting that concluded today, we maintained our policy interest rate, but made some significant changes to our statement. Since the beginning of the year, we have judged that our current policy stance was broadly appropriate and that we should be patient in assessing the need for any changes. In light of increased uncertainties and muted inflation pressures, we now emphasize that the committee will closely monitor the implications of incoming information for the economic outlook and will act as appropriate to sustain the expansion with a strong labor market and inflation near its 2% objective. So far this year, the economy has performed reasonably well, with solid fundamentals supporting continued growth and strong employment. Inflation has been running somewhat below our objective, but we've expected it to pick up, supported by solid growth and a strong job market. Along with this favorable picture, we've been mindful of some ongoing cross-currents, including trade developments and concerns about global growth. News about trade has been an important driver of sentiment in the intermeeting period. But we're also looking at global growth. It's really trade developments and concerns about global growth that are on our minds. So we're not exclusively focused on one event or one piece of data. Risks seem to have grown. In the meantime, we have incoming data in the United States that's been pretty good, particularly for the consumer. Consumer spending is solid, supported by a healthy job market, high levels of employment, wages going up. So why not now? And I would say there was not much support for cutting rates now at this meeting. There was, as you see, a number of people wrote down rate cuts, but all of those, but apparently one, felt that that it would be better to see more before moving. And I gave a couple reasons why that is the case. First is just the fact that some of these developments are so recent that we want to see whether they'll sustain. So we felt that it would be better to get a clearer picture of things and that we would in fact learn a lot about these developments in the near term. Ultimately, the question we're going to be asking ourselves is, are these risks going to be continuing to weigh on the outlook? And we will act as needed, including promptly if that's appropriate, and use our tools to sustain the expansion. We're quite mindful of the risks to the outlook and are prepared to move and use our tools as needed to sustain the expansion. I would say this: if we do provide more accommodation, again, we haven't really addressed this, but if we do provide more accommodation, we'll certainly keep in mind what we said earlier this year, which is that we'll always be willing to adjust balance sheet policy so that it serves our dual mandate objectives. Digital currencies replacing central bank currencies. I think we're a long way from that. And of course, so I think we're a long way from that. Digital currencies are in their infancy. So essentially, not too concerned about the central banks no longer being able to carry out monetary policy because of cryptocurrencies or digital currencies. Facebook, I believe, has made quite broad rounds around the world, really, with regulators, supervisors, and lots of people to discuss their plans, and that certainly includes us. And it's something we're looking at. We meet with a broad range of private sector firms all the time on financial technology, and there's just a tremendous amount of innovation going on out there. There are potential benefits here. There are also potential risks, particularly of a currency that could potentially have large application. So I would echo what Governor Carney said, which is that we will wind up having quite high expectations from a sort of safety and soundness and regulatory standpoint if they do decide to go forward with something.
Could you clarify what you would do if the president tweets or calls you to say he would like to demote you as Fed chair?
I think the law is clear that I have a 4-year term, and I fully intend to serve it.